Hey everyone, and welcome to this explainer. Today, we're jumping right into a quiet, incredibly structured, and honestly, immensely powerful wealth-building strategy. We're talking about a strategy that has quietly created some of the richest people in history, and yet, it's something the average person completely ignores. We're going to break down exactly how this whole thing works, step by step. And I promise you, once you really understand it, you're never going to look at your money the same way again. So let's dive right in.
Okay, I want you to picture this. You've got two people. They're both exactly 25 years old. They both earn the exact same salary, and they're both starting from absolute square one, with basically nothing in the bank. Now, let's fast forward 25 years. One of them is sitting on a net worth of over $15 million. The other? Well, they're still waking up every single day stressing over bills, loans, and wondering how they're ever going to afford to retire. They had the exact same starting line, but drastically different finish lines.
So, you really have to ask yourself, what actually happened here? Did one of them just get super lucky and hit the jackpot? Nope. Did they invent some billion-dollar tech startup in their garage? No. Did they stumble on some secret underground stock that made them rich overnight? Not even close. The difference between these two people is actually something so incredibly simple, yet completely profound.
Look, if you go on the internet right now and ask how to get rich, you are instantly hit with just a wall of frantic noise. You hear people screaming, you got to find the next Tesla, or buy Bitcoin before everyone else does, or you need to be day trading every single morning to catch those hot new AI stocks. Honestly, it is exhausting. Social media is just absolutely flooded with screenshots of people supposedly making thousands of dollars overnight from these once-in-a-lifetime viral trends. And yeah, it all feels super exciting, right? But here's the uncomfortable truth. Those stories are designed to grab your attention. They are not designed to actually build your wealth.
So let's slow things way down for a second, because the reality of successful investing, it's the complete opposite of all that frantic noise. It all comes down to the definition of an asset, which is super simple. It's something you own that works for you to produce future cash flow. That is the foundational, kind of counterintuitive truth here. Wealthy people, think Warren Buffett, they don't get rich by chasing a new trend every month. They focus entirely on acquiring assets, they buy great things, they hold them for decades, and they let time do the heavy lifting. While most people work for money, the wealthy just own things that work for them.
Think of it like this. Imagine you own an apple tree. Every year it produces apples, right? You can eat them, you can sell them, or you can use the seeds to plant even more trees. But imagine if, instead of doing that, you just chopped the tree down immediately to sell the wood. I mean, sure, you'd make a quick profit once, but you'd be completely destroying years and years of future harvests. And this is exactly how most people treat investing. They chase that quick, one-time profit of cutting down the tree instead of just building a long-term, income-producing financial forest.
Section 1. Buying money machines.
Billionaires use their cash to buy machines that are quite literally designed to create even more cash. That could be a rental property generating monthly rent, a business producing yearly profits, or a diversified portfolio paying dividends. Let's look at how this plays out in real life with two friends, Alex and Sarah. So both of them get a nice bonus at work. Alex goes straight out and spends his on a brand new luxury watch. It looks awesome. He gets a couple dozen likes on Instagram, but a year later, the thrill is gone and the watch has lost a huge chunk of its value. It earns him absolutely nothing. Now Sarah takes that exact same bonus and invests it into diversified assets. Over the years, those assets grow, they generate income. Eventually, her assets are producing enough returns to buy that luxury watch several times over, without her ever having to touch her original investment. Alex bought immediate status. Sarah, she bought long-term freedom.
So, the absolutely crucial point here is this: consumers cost you money, employees make you money. I really want you to start looking at every single dollar you earn as a financial employee. Because you have a choice. That dollar can be a consumer, spent on things that just lose value and cost you money, or it can be an employee put to work to generate more income. Billionaires are constantly hiring as many financial employees as humanly possible so that eventually those employees can go out and hire even more employees.
Section 2. The real enemy is you.
You know, the math of investing is actually pretty easy. It's our emotions that ruin us. Imagine this scenario for a second. You wake up, you roll over and check your phone, and you see that the stock market has suddenly, sharply dropped by 20%.
Immediately, the news headlines are screaming in all caps, "Markets crash." Financial experts on TV are literally debating if this is the end of the economy as we know it. Your friends are texting you in an absolute panic. Social media is just a total frenzy of doom and gloom.
So I have to ask you directly,
in that moment of pure, concentrated panic. Do you sell? Because honestly, that's exactly what the average person does. They let fear take the wheel and they sell. Not because the companies they own are suddenly worthless, but just because they're terrified. But a billionaire? They wake up to those exact same headlines and usually they don't panic at all. In fact, they start looking for opportunities. They just see the quality assets went on a massive 20% off sale. The wealthy build systems to stay disciplined, while average investors let their emotions dictate their entire financial future.
Section 3. The lifestyle inflation trap.
Now, this right here is the invisible obstacle that is keeping high earners completely broke. It's the trap of scaling your lifestyle instead of scaling your investments. Let's say you get a massive promotion, an extra $30,000 a year. Amazing. But what usually happens? Well, you move to a bigger apartment, you lease a fancier car, you add like 5 new streaming subscriptions you're never actually going to watch, you start taking luxury vacations and buying designer clothes. And before you even realize it, that extra $30,000 has completely vanished. Your income doubled, but your savings didn't budge a single inch. You might feel richer, but you are absolutely no closer to actual financial freedom.
Instead of falling into this inflation trap, the wealthy build a completely different reality. When they get a raise, the very first thing they do is increase the amount they invest. Instead of asking, okay, what can I buy? They ask, what asset can I own? And this creates a powerful wealth snowball effect. Income buys assets, those assets produce returns, and those returns buy even more assets. Now, at first, this feels painfully slow, but give it years, and that momentum becomes an absolute unstoppable force.
This basically tests exactly how your brain is wired. Would you rather have 1 million rupees right now, today, or an investment that grows steadily over decades? Now, most people are going to grab the cash today because, let's face it, we crave immediate gratification. But the secret weapon of the ultra-wealthy is delayed gratification. Warren Buffett is a literal masterclass in this. He didn't become a billionaire by having the highest salary in the world. He did it by giving his investments decades to compound and grow. Patience is, for sure, your greatest investment partner.
Section 4. The Billionaire Investment Formula. Now, you might be sitting there thinking, well, I don't have millions of dollars to do this. But you don't need millions. You just need the discipline to start treating your money differently. You need to consistently pay yourself first. A lot of people fall victim to survivorship bias. They see that one guy on social media who got rich overnight taking a massive gamble, but they completely miss the thousands of people who lost everything trying that exact same thing. Building wealth is a lot like slowly climbing a mountain, step by step. Yeah, it might feel frustratingly slow sometimes, but if you take a reckless emotional shortcut near the top trying to get rich quick, you risk falling all the way back down to the absolute bottom. Protecting your money from impulsive gambles is just as important as growing it.
So here is the linear formula. This is the unglamorous ultimate secret to building generational wealth. Step 1, earn income. Step 2, spend less than you earn. Step 3, buy productive assets. Step 4, reinvest those returns. Step 5, stay patient. And Step 6, repeat. Notice what's missing here? There's no magic stock. There's no secret crypto trick. It is literally just pure discipline, consistency, and time.
Picture 2 people standing side by side. One spends the next 20 years frantically chasing every new trend, every hot stock, just completely exhausting themselves in this pursuit of overnight riches. The other person, they spend 20 years engaging in quiet, boring, consistent investing. No bragging, no viral moments. 2 decades later, the first person really just has a bunch of stressful stories. But the second person, they have total financial freedom. Wealth isn't built in these dramatic, movie-like moments. It's built through ordinary, boring decisions repeated over time.
So, I want to leave you with a final provocative thought to take away from this explainer. If you suddenly had an extra 100,000 rupees today, right this second, what would you honestly do with it? Would you spend it on something that's just going to lose value, or would you invest it into an asset that actually works for you? How you answer that question today will directly determine how financially free you are tomorrow. So take that billionaire mindset and start putting your money to work.